Despite increasing talk over the past couple of months of a housing market crash, in today's video, I'm going to share some information with you on why I don't think the housing market's going to crash anytime in the foreseeable future. Hi, this is Andrew with the S2 Real Estate Team in Frisco, Texas. And talk of a housing market slowdown and a crash and this and that has been dominating the headlines for the last couple of months. And today, I'm going to go into a few reasons on why I don't think that's going to happen. And I know that might not be popular, as I know there's a lot of people out there hoping the market will crash, certainly not if they own a home. But for anyone that's been contemplating buying it, they'd love to see these prices come tumbling down. And I can completely understand that. But again, it's important to understand that in order for there to be a crash, crashes happen when there's overexuberance in a market and you have things running against normal economic laws. There's a great deal of speculation, for instance. And when that bubble bursts, everything comes tumbling down. And, you could argue and say, well, look at the market the last couple of years. Has that not been overexuberance? Has home prices not just soared dramatically? And they have. I openly admit that. Home prices have increased dramatically over the past couple of years. And I think we can all agree that the situation we were in was completely unsustainable. But how did we get there? And it's something I've been talking about in my videos over the last couple of weeks. As a matter of fact, Troy, my business partner, and I met this morning and we had the exact same conversation. We were going through the data and basically reached the same conclusion. The fundamentals of the market right now remain incredibly strong. And what we've seen over the past couple of years is supply and demand at play. That's what it has been. You had incredibly high demand. Part of it could be artificial, based upon ultra low mortgage rates and how they got there. I talked about last week, so feel free to check out that video. I've got a description, or I've got a link to it in the description below, against incredibly tight supply. So in order for there to now be a crash, we're going to need there to be massive supply against a huge drop in demand. And it doesn't look like that's going to happen. As a matter of fact, even though demand has taken a hit over the last couple of months due to rapidly rising mortgage rates, unexpectedly, supply has started to fall. Supply is down. It's Andrew, but wait a minute. I just saw in the news that inventory is way up. It is up. But again, some perspective is in order. So I'm going to go ahead and share a few slides with you here to kind of explain what I mean. All right, so this first slide that we're looking at here is looking at inventory overall. And granted, the information I'm going through here is national, and it's going to vary from market to market. And I'll touch on that a little bit more at the end in how you can get the latest information specific to your market. But when we talk about inventory, understanding inventory is simply supply. And although the inventory across the country has gone up, here we are right now running at about a 3-month supply. 6-month supply is what's considered a balanced market. Doesn't favor buyers, doesn't favor sellers. So our 3-month here, 3 months worth of inventory here, is still substantially lower than what we've seen for the most part going all the way back to 1999. But what about all those reports of rising inventory? And yes, inventory is absolutely up, but it's still historically low. So again, perspective is really important here. So you've been hearing there's more homes for sale. There's more homes for sale. There are. So if you look at the, this is looking at the week of August 12th, and, week over that week, year over year, inventory was up 30.3%, actually slightly higher than that here in Frisco. But if we look at the same week in 2020, inventory is down 8.6%. If you go back to the same week in 2019, and I like going back to 2019 because it's the last normal year we had pre-pandemic, which, as you'll remember, was an incredibly strong year in real estate, as was 2018, 17, etc. If we go back to 2019, inventory is down 43%. So although inventory is up, you can still see how far down it actually is compared to just a couple of years ago, which kind of adds a little bit of fuel to the fire on how tight it was over the last year or two, causing prices to increase dramatically. And sellers today are in a position where, to be honest with you, they don't have to sell. And I think that's one of the reasons we're starting to see that inventory plateau. New listings week over week is going flat, and inventory is not climbing as much as many of the experts said. Because let's be honest, people have built, or sellers, homeowners have built a ton of equity. And if they're locked in at a mortgage rate of 3.25%, do they really have to sell? Do they really need to? And the answer is no. But the people in the market buying right now, they really need to buy. So although demand is down, it's still strong. We're still seeing homes that are listed correctly sell relatively soon. They're not sitting on the market a very long time at all. And the new home communities here in North Texas are jam-packed with people, and they're all reporting a strong pace of sales. So where else can we get inventory from? Where else could we see a massive jump in inventory supply that would cause things to kind of tip and go the other way? And one of those areas that has been discussed is foreclosures. Remember, when the pandemic hit and unemployment spiked, there was a belief out there that we would see a tsunami of foreclosures that would decimate the market. Didn't happen. Right? So it's important to remember that foreclosures are a part of every single real estate market, good and bad. Now, is foreclosure activity up? It is. But again, foreclosures are a part of every single market. So if we go back and we look at the number of foreclosures that took place every year, going back to 2005, you can see the 151,000 foreclosure filings we had last year is the lowest of any of those years. Every year with over 1 million foreclosure filings is shown here in red. Yeah, but there was a moratorium in place. There was. You're right. That's 100% correct. There was a moratorium in place, so that drastically cut the number of foreclosures. So again, it's being reported that year over year, foreclosures are way up. So if we look at this slightly different, here's foreclosure activity in the first half of the year going back to 2008. So again, you look at 2022 on the far right side of the graph there, nearly 165,000 foreclosure filings in the first half of 2022. Is that a dramatic increase over 21? Absolutely. But look at 2020. It's right on pace with where it was in 2020. Well below where it was in 2019, 2018, 2017, 2016. So you get the point. Many of the people here that are in trouble have enough equity to sell their home, plain and simple, right? Just as a standard traditional sale. But the number of actual distressed properties coming to market, for anyone that thinks there's going to be a massive jump, it's just not going to happen. There's just nothing there with regards to this. You remember the moratoriums were put in place and they worked. They prevented foreclosures as they were supposed to, as they were intended. The government did a great job on that aspect. Nobody wanted a repeat of what we went through in 2008 and 9. But home prices are going down. There's price cuts everywhere. How can this be? Well, there's an element of truth to that too. So if we look at this right now, this is from Black Knight, who track all of this information pretty carefully. As they mentioned, annual home price growth dropped by nearly 2 percentage points, the greatest single month slowdown on record since the early 70s. And that's what's been reported. That's what's been in the media. However, as Black Knight goes on to say, while the slowdown was record-breaking, home price growth would need to decelerate at this pace for 6 more months to get annual appreciation back to the long-term average rate of 5%. Right? So again, The pace of appreciation is decelerating, but that doesn't mean that the year over year home prices are falling. Now, here in Frisco and Prosper, are prices down from where they were 3 or 4 months ago? Absolutely. And that's going to be the case in most markets across the country. That exuberance is gone. That peak is gone. And home prices have fallen from there without a doubt. They are lower than they were then, but they're not lower than they were ago last year. They're not lower than this time last year, right? They're still up. So the idea that we're going to come back to something normal and then see a 20-30% price decline from there, right now, it just isn't in the cards. There's nothing that shows that whatsoever. As a matter of fact, the pace or the total appreciation to expect in 2022, the forecasts from the experts have just gone up. Here's what I mean. Every January, many of the experts issue a forecast, and you can see right here in January 2022 what Fannie, Freddie, National Association of Realtors, Zelman and Associates, Home Price Expectation Survey, and the Mortgage Bankers Association all forecast home prices to be the pace of appreciation we should see in 2022. You can see the latest forecast that was just done recently. Every single one, except the Mortgage Bankers Association, has revised their forecast up. The average of all of these is about 10%. I know here in Frisco, the latest forecasts from companies like Zillow are still forecasting right around 10.5 to 11.5% price appreciation year over year in the next 12 months. So again, although the pace of appreciation is coming down, the total homes are still appreciating. I know that kind of sounds funny, that the pace is coming down, but homes are still going up. And it does get confusing. I understand that. So what does it all mean? Where's it going to go? Well, I'm not going to pretend to know exactly where things are going to go 2, 3, 4 years from now. Will there be a correction in the housing market? Absolutely. Housing market is cyclical. What's going to happen with a recession? I don't know. How much of a recession are we going to have? Are we in one now? I mean, the politics behind that. In order for there to be a dramatic change in where housing is going, we would need to see unemployment spike tremendously. And right now, there's no indication of that. I know locally here, there's still plenty of jobs available, a lot of competition amongst employers trying to get employees in their doors. And with that in mind, we would need to see a prolonged recession with a big spike in unemployment in order to start to have a dramatic negative impact on the housing market. So again, that's the latest information. I share this to kind of give you, the data behind the headlines. And again, as I mentioned earlier on in the video, if you'd like to know what's going on in your local market and keep an eye on this information yourself, in the description below, I've got a link to the Frisco weekly market report. You may not be interested in Frisco, and that's fine. But from that report, you can search any city or zip code in the entire country. You can even subscribe to have that report emailed to you every single week so that you can get an idea on which way prices are trending, what supply is doing in your local market. So hopefully that helps. If you have additional questions at all, please don't hesitate to reach out, Troy, or I would be more than happy to talk to you. You can give us a call at 469-296-5230, or feel free to send an email to contact@s2realestateteam.com.